So should you get an FHA loan or should you get a conventional loan? You know, that's a question many buyers ask themselves as they go through the pre-approval process. So in this video, I'm going to break down in detail the difference between an FHA loan and a conventional loan so you can tell what's best for you when you're getting pre-approved for a mortgage. Hey everyone, this is RAYCE Robinson, your favorite Florida mortgage broker. And do me a favor, if this video is useful or you find it interesting, like the video, helps other people find it. Subscribe to my channel if you want. I'm going to do anything with real estate here in Florida. And if you're ever looking to get a mortgage and the property's in Florida, let me know what I can do to help. That being said, let's go and take a look at the differences between an FHA mortgage and a conventional mortgage. Okay, so here we go. So on FHA and conventional, it is something you want to note that they both have maximum loan limits. And they usually adjust those at the beginning of every year. These are the new ones for 2021. FHA is currently at $356,362, and conventional loans are $548,250. That's pretty much most of Florida. I did put the links here on the slide if you want to look up for a particular area, but for most of Florida, this is going to be accurate. And remember, this is for single-family homes, not 2-unit or 3-unit properties. Those actually limits go up. And again, you can look those up on these links. It is important to note that as of now, as of last year, you can do condos with FHA. So really for FHA and conventional, a single family home is going to be considered a single family house, a condo, a townhome, and a manufactured home. So those are mainly what they're talking about when they say single family homes. So these are the current loan limits for 2021. Okay, so we're going to do a little comparison here between FHA and conventional. Keep in mind there's really no right or wrong. Both of these are great loan programs. There just are some differences. Both FHA and conventional have some advantages and disadvantages when compared to each other. So big thing with FHA, they do allow a lower down payment at 3.5%. Most conventional loans start at 5%. They do have a 3% down program, but the rates and mortgage insurance are higher, where with FHA you don't get penalized. So in general, we always say FHA has the best deal on the lowest down payment. There's always some caveats to that, but FHA is at 3.5% for down payment. That is the minimum down payment that you can put down. You can of course put down more. Seller contribution is 6%. That means you can ask for $6,000 in closing costs for every $100,000 in purchase price, where on a conventional it's only 3%. So it does allow you to ask for more help from the seller if you're limited cash, funds for cash to close. Has the lowest initial payment. The biggest thing with FHA, it's not as impacted by credit score as it is on a conventional loan. So on a regular conventional loan, if you have a low score, you're going to get a much higher rate. Where for the most part on FHA, if someone has a 640 score and someone has an 800 credit score, the deal that they're getting as far as on the rate is very similar, which is nice, especially if you do have a lower credit score. FHA is definitely going to be the way to keep the lowest payment. They do have lower monthly mortgage insurance for the most part than a conventional loan. Again, because on a conventional loan, your credit score impacts what mortgage insurance rate you get. Where on an FHA loan, it's set. So lower down payment, lower actual payment, and then the other part is it allows higher debt ratios, meaning on an FHA loan, you're going to qualify for more house. So if you qualify for 300 on a conventional loan, you could very easily qualify for 350 on an FHA loan. Again, that makes it really nice because you can actually move what house you can buy or your price point by going FHA. That is one big benefit FHA does have over conventional. It allows for higher ratios. Again, lower credit scores, more flexible guidelines, depending on the situation, and we can do manual underwriting, which basically means that we can send the file directly to an underwriter, to a true human being, not a computer system, and get them to analyze and make a decision on the merits of a file. There's definitely an art to putting a manual underwritten file together. We do it all the time, so it depends on the situation, but FHA does have that option where on a conventional loan you cannot do that. And then on a FHA loan, there's shorter times between bankruptcies and foreclosures, which is nice, meaning you're going to qualify to buy a house sooner on an FHA loan than a conventional loan after a bankruptcy, short sale, or foreclosure. So So the big disadvantage of FHA is one, and this is probably the biggest one, the mortgage insurance is for the life of the loan. So when you close on your FHA loan and you have that monthly mortgage insurance, on a conventional loan, once you pay down the equity down to under 20%, you can drop the PMI. Where on an FHA loan, the only way you can drop it in the future is to refinance. Funding fee of 1.75% of the loan amount. On every FHA loan, for every $100,000, they're charging you $1,750. Now it doesn't affect your cash to close, it gets rolled into the loan, but it's an extra cost of doing an FHA loan. And those are two pretty big ones. If you think about mortgage insurance being for the life of the loan, meaning you're going to have to refinance down the road, and then funding fee, the upfront cost can get expensive. You know, if you're buying a $300,000 house, you can have close to $6,000 in a funding fee that's getting paid directly to FHA. Now that you may still have a much lower payment than a conventional loan, but those are costs that you need to know about. And there are more appraisal requirements on an FHA loan. Typically the appraiser is required to do a little more work when he's inspecting the property, he or she's inspecting the property. This is probably the biggest one, at least in 2021 and definitely last year too, is realtors think that FHA is not as strong as a conventional loan. And that's important to know, because when you get pre-approved for a mortgage, the goal is to get a house, and you are going to be competing against other sellers that are going to be trying to buy a house, or other buyers are going to be trying to buy a house. If you're competing against a buyer that has a conventional approval and you have an FHA approval, the realtors are going to tend to favor the conventional offer over yours, even if it's the same price that you guys are giving the seller. So that is a good thing that your agent is going to tell you, that if you can get approved for a conventional loan right now, at least in 2021, it's going to make sense to do that. And I would agree, because there's limited inventory, it's very competitive, and getting a conventional loan, if you can qualify for one, definitely is going to help your offer get accepted. All right, so on a conventional loan here, again, last thing on an FHA, it's only for primary residences. You cannot do second homes or an investment property. All right, so a conventional loan, mortgage insurance, again, not for the life of the loan. You can drop the PMI, one, by putting 20% down when you buy the house, or if you put, say, 5% down or 3% down, once you pay down the equity, you can drop the PMI once you get 20%. I'll include a link to a video I did on dropping PMI on a conventional loan, because it can be a little bit tricky. So I'll put that in the notes in the description, so that you can watch that if you have a loan that you've paid down on a conventional loan and you're wanting to drop the mortgage insurance. The mortgage insurance does get lower the more you put down. So on an FHA loan, if you put 20% down, you still get mortgage insurance. On a conventional loan, if you put 20% down, you do not get mortgage insurance. But one nice thing is, if you put, say, 5% down, or someone else puts 15% down, your mortgage insurance or your PMI monthly rate goes down. So on a conventional loan, you do get rewarded for putting a bigger down payment, because the mortgage insurance rate drops, which does lower your payment. There are no funding fees, so that 1.75%, you do not have that on a conventional loan, which saves you a ton of money up front. And it doesn't have to be a primary residence. Conventional loans will do second homes, and they'll do investment properties. And then again, this is probably the key one, is they're going to consider it a stronger offer when you're competing against other offers. So what are the disadvantages of conventional compared to FHA? Higher down payment. Again, most people doing conventional loan are doing at least 5% down. Fannie Mae does have a 3% down program that does have higher rates, and the 3% max seller contributions. They can be, so FHA is often going to be higher payment than an FHA. One, because the rates are going to be higher, and often the PMI can be higher. It's really going to depend on your credit score. So if you have a 740 score, so anytime you're seeing rates advertised on the internet, they're advertising a 25% down payment, a 740 score higher, and a single family home. So if you meet all those criteria and you've got super high credit, big down payment, you're not buying a condo, or you're just buying a regular single family home, then the payment's probably going to be lower on a conventional loan. But other than that, if your score is lower, then you're going to get a lower monthly payment on an FHA loan. Lower debt ratios, meaning that you're going to qualify for less on a conventional loan, and the minimum credit score for FHA or for conventional 620, where with FHA we have some lenders that will even go down to a 560 score depending on the situation. There's a lot of caveats to that. No manual underwrites, meaning basically everything's ran through Fannie Mae's automated system, and if you cannot get the approval, then you can't manually underwrite the conventional loan with most banks. You're going to have to get that automated approval. So again, the better credit, the easier it is to get a conventional approval. And then a longer time for bankruptcies and foreclosures and short sales. I could do a whole video on that, but in general, you're waiting at least 4 years for a bankruptcy, foreclosure, or short sale, and usually 7 years for a foreclosure. Okay, and lastly, I'm just going to note there are some special programs that both Fannie Mae and FHA have where you can do rehabs as part of your loan, maybe potentially put a pool in, fix the AC unit, fix the roof. There are a lot of caveats to that. I'm not going to get to that into this video because it is really a video in and of itself. But if you have any questions on that, reach out to me. I did put Home Ready and Home Possible. Those are two Fannie Mae and Freddie Mac 3% down loan programs that are really great if you qualify for them. Again, they do have special requirements. So hopefully this video helps for you to understand the differences between FHA and conventional. Do me a favor again, if you like the video is useful, like it, subscribe to my channel. And if you're looking to get a mortgage in Florida, let me know. I'd love to earn your business. No lender fees, easy, straightforward, honest mortgage advice you can count on. I partner with you all the way through, not only to help you know what the best loan program for you is, exactly how much you qualify, but what program we're going to use and why. So again, let me know what I can do to help. Have a great day, great 2021, and I'll talk to you soon. Bye-bye.